Dirty dealings, corporate battles, consumer woes. This is Evening 5. Former Finance Minister Tun Daim has been charged with failing to declare his assets, including 7 vehicles, 6 properties, 38 firms and 19 plots of land. The 86-year-old, who arrived in court in a wheelchair this morning with his family, pleaded not guilty to the charge under Section 36(2) of the MACC Act 2009. Judge Azura Alwi set a 280,000 ringgit bail with one surety. In a prepared statement, Daim called Prime Minister Datuk Sri Anwar Ibrahim a wolf in sheep's clothing who cries reforms but does the polar opposite. He said Malaysia was previously under the shadow of the 1MDB scandal, but now it is under the shadow of an administration that is abusing its powers while betraying all the promises of reform. For the sake of becoming the Prime Minister, Anwar made a person facing corruption charges as the Deputy Prime Minister, after which the charges were dropped like magic, Daim said in reference to Datuk Sri Dr. Ahmad Zahid Hamidi's case. Meanwhile, he said the economy continues to take a hit, while the plight of ordinary Malaysians is ignored. YTL Power International's Singapore unit has won the right to build, own and operate a hydrogen-ready combined cycle gas turbine unit with a capacity of at least 600 megawatts. This follows a request for proposal called by the Energy Market Authority of Singapore in July 2023. YTL Power Seraya CEO John Ng said the facility will be constructed at Pulau Seraya Power Station. The plant is estimated to cost 800 million Singapore dollars or 2.82 billion ringgit and is targeted to be completed by December 31st, 2027. According to YTL Power, the plant will be at least 30% volume hydrogen ready with the ability to be retrofitted to become operationally 100% hydrogen ready in the future, aiding in Singapore's net zero emissions aspirations by 2050. YTL Power Seraya's power generation business has a licensed generating capacity of 3,100 megawatts, known as the Jurong Power Station. Shares of YTL Power on Bursa Malaysia were down 0.5% to end at RM3.95, valuing the group at 32.22 billion ringgit. Year to date, the counter has risen by 53.7% from RM2.57 at the start of the year. A research firm expects Malaysia's automotive industry to be affected by the rollouts of the High Value Goods Tax or HVGT and higher service tax rates this year. Maybank Investments Bank said the HVGT to be implemented from May 1st could have an effect on premium vehicle sales. Other factors to watch out for that could affect industry players are targeted subsidy rationalisation and higher service tax rates, which cover vehicle repair and maintenance services. In a research note today, it said these are expected to increase the costs of vehicle ownership and hurt new car sales. Maybank IB also highlighted the rising trend from dealership to the agency model, driven mainly by Western car makers' plans to establish a stronger presence in Southeast Asia. It sees total industry volume stabilizing at 650,000 units in 2024, a 19% fall year-on-year after 2 straight record years of growth. The research house maintained its neutral rating of the sector. It favours Burma's for its strong fundamentals and resilient financial standing, robust free cash flows and an attractive dividend yield offering of over 8%. Lotte Chemical Titan Holding booked its 7th consecutive quarter in the red in the 4th quarter of FY 2023, though losses narrowed amid lower feedstock costs and forex gains. Net loss came in at 186.48 million ringgit from 333.64 million ringgit in the 4th quarter of FY 2022, despite a 10.26% fall in revenue to 1.86 billion ringgit, which it attributed to lower sales volume as economic activities in the region slowed. Still, full-year net loss widened year-on-year to 780.29 million ringgit from 731.06 million ringgit previously, as its top line shrank 23.68% to 7.65 billion ringgit. Lotte Chemical Titan said the weaker performance was mainly due to decline in margin spreads, share of loss from Lotte Chemical USA Corp, and partially offset by reversal of inventory write-down to its net realizable value. President and CEO Park Kyun-chul said the group has implemented a business optimization plan amid market uncertainties, leading to a lower overall plant utilization of 67% in FY 2023 compared to 77% in the corresponding year. Lotte Chemical Titan's shares traded down 2% to close at RM1.46 for a market value of 3.38 billion ringgit. Ace market debutant Master Tech Group expects to see an increase of at least 2% in its market share within the Malaysian wires and cable manufacturing industry post-capacity expansion by the second quarter of 2024. The group, which held a market share of 3.57% in 2022, is about to start operations of 2 new medium-voltage power cable manufacturing plants in Malacca. In a press conference following its listing ceremony, Master Tech CEO T. Kok Wah said the current market value of Malaysia's cable and wire industry is about 10 billion ringgit. The group allocated 16.78 million ringgit or 27.22% of the initial public offering proceeds for the 2 plants. Another 24.39 million ringgit or 39.55% will go towards the purchase of new machinery and equipment. Master Tech's Bursa debut saw the stock trade between 38 sen and 40 sen before ending its maiden trading day at 36 sen, down 7.69% from its IPO price of 39 sen, for a market capitalization of 367.2 million ringgit. The counter was the 4th most active on Bursa, with 106.8 million shares changing hands.